Hello friends, today we are going to learn how to classify capital and revenue expenditure. What is a business expenditure? Obviously, we have to classify business expenditure and private expenditure. Proprietor's expenditure like his kids' school fees which is paid monthly, say from business bank account. These are private expenditures and should not be taken into consideration when we are classifying business expenditure. Basically, a business expenditure is an outflow of economic resources, mostly in the form of cash or cash equivalent. Why these are incurred? Just like household expenses on food, electricity, water, phone, and internet. Similarly, to undertake various business activities, these business expenditures are incurred. Now from this chart, it is clear that how do we classify business expenditure. Basically, business expenditure is classified in three categories: capital expenditure, revenue expenditure, and deferred revenue expenditure. Nowadays, if we go as per IFRS, International Financial Reporting Standards, then there is no classification under deferred revenue expenditure. It is just restricted to capital expenditure and revenue expenditure. Now let's go through these one by one. Now what is capital expenditure? As on the right hand side from the figure of capex examples, capital expenditure example, we can see that computers, machinery, land, building, vehicles, these all are examples of tangible fixed assets. Similarly, licensing rights, trademarks, software, these are examples of intangible fixed asset. So basically, in case of capital expenditure, it is an investment activity which in the form of huge amounts, non-recurring in nature. We are not going to purchase computers or machinery daily, and the benefits are derived for long term. It is basically acquisition, creation or purchase or improvement in fixed assets. Now what is revenue expenditure? Basically, it is for generating revenue, that is incurred during production process to generate revenue. Benefits are for temporary period, maybe one accounting year. It is routine in nature. You can see on the right hand side in the examples given: wages paid, utility expenses, rent expenses, selling expenses. These are small amounts regularly paid, routinely and recurring in nature, and incurred on maintenance of fixed assets or repairs or fixed assets. Now sometimes, although it looks like revenue expenditure, it may not be revenue expenditure. Say for example, wages paid on erection of plant and machinery, or raw material or stores used in construction of fixed asset, or legal expenses incurred to acquire a particular fixed asset, or repairs or purchases of second hand assets to put into workable condition. Now all these are examples of capital expenditure. Why? Now when we purchase a second hand asset, unless we repair it, it will not be in working condition. So it is being made on creation of a new fixed asset. So these expenses are capitalized. It is not on maintenance or repairs. It is not a routine expenditure. It is non-recurring in nature, and the benefits are derived for long term as earning capacity improves or a new fixed asset is created or acquired. So these are examples of capital expenditure, although it seems like revenue expenditure. Now what is deferred revenue expenditure? As one can see from here, it is deferred. Deferred means delayed revenue expenditure. It is revenue in nature, but the benefits are delayed. Benefits are not in that year, but in forthcoming year or next few years. Say for example, whitewashing of building. The whitewash of building doesn't improve its working condition, doesn't improve its nature, but it is just for maintenance of the building. So deferred revenue expenditures are basically shown in the form of fictitious assets or prepaid expenses. So what is the striking difference between capital and revenue expenditure when we come to fixed asset? Cost of acquiring a new fixed asset is capital expenditure, whereas the cost incurred to maintain it is a revenue expenditure. Now, if we want to find out the basic differences between capital and revenue expenditure, so the capital expenditure is basically in form of acquisition of fixed asset, whereas revenue expenditure is incurred for maintenance of fixed asset. Capital expenditure obviously increases the earning capacity and benefits are derived for more number of years, whereas revenue expenditure helps us to maintain the same earning capacity of the business and benefit is accrued only for that particular accounting year. Capital expenditure is shown in the form of fixed assets in balance sheet, whereas revenue expenses are debited to trading and profit and loss account. Capital expenditure is investment activity, it is non-recurring in nature, whereas revenue expenditures are recurring, repetitive in nature. And few examples we have already seen through. So hope this will help you to identify capital and revenue expenditure. Thank you.